And the strong US dollar and a sluggish domestic markets have dented the sentiment for the rupee today. The currency ended the day on your screens more than 0.25% down at 62.31. Live Eskisen, Chief Economist, India and Asian at HSBC Global Research, now joins us on the show with his take on the forex markets, Indian and global as well. Live, hi. Do you feel the strength in greenback can put immense stress on the rupee and other emerging market currencies? Also, India is highly vulnerable to changes in the external funding environment, and moreover, fiscal repair will also be a long process in the upcoming elections. How will all of this guide the rupee directionally?
Well, I think, of course, the INR is still, somewhat susceptible to changes in global financial conditions because despite the reduction we have seen in the current account deficit, it remains sizable still. So India still depends more so than other emerging markets, not all, but some of them at least, on external funding. So, of course, they are susceptible to changes in that. With Fed tapering now underway, although in a more controlled manner, that, of course, poses risk for India on that front. I would say, however, though, I wouldn't suspect that we're going to see the same type of gyrations we saw over the summer. I mean, since then, the current account deficit has narrowed notably. Funding conditions have improved. And yes, Fed tapering is underway, but it's not being executed maybe in the more draconian fashion that a lot of market watchers were fearing over the summer. It's gradual tapering we're looking at. The Fed wants to be cautious about getting yields up in the US and manage that very diligently. So I think we will not see the same sort of disruptions on that front. I would also suspect if the currency does get under more pressure, as we saw over the summer, there would be a policy response to that would help alleviate some of the volatility. So it's probably going to hover around current levels. The level of volatility will be lower than what we saw over the summer. On balance, probably a bit of a bias to the downside to the currency, but not to a great extent. But volatility, of course, in the short term will be there.
Fair point, Life. Also, the rupee has depreciated 12% versus the US dollar. On a relative basis, it has perhaps outperformed many of its EM peers in this last quarter due to rapidly improving current account, healthy capital inflows and RBI steps as well. But will this outperformance stretch through 2014 vis-a-vis EMs or Asian peers, even as some say that 2014 may be the year of dollar and euro?
I think, as I mentioned earlier, that the INR is still relatively, shall we say, vulnerable compared to some of the other currencies in the emerging market space. As I said earlier, India still has a high current account deficit. It's not as sizable as it is, for example, in Turkey or countries like that, but it's still sizable nevertheless. So I think it's still in the group of shall we say, currencies, EM currencies that are relatively more vulnerable because of the external position. But as I mentioned earlier, relative to where it was this summer, things have improved, and that suggests that we're probably going to have somewhat less volatility on that front. But I think so you need to look at it from that perspective.
Life, also, do you see a sign of currency wars in the Asian emerging markets as the US tapering moves towards a conclusion, perhaps?
I mean, there, of course, are always, in some sense, risks when you have that economic conditions are not as strong as they used to be. Individual countries are somewhat more concerned about, preserving growth, if you will. But I would still say I wouldn't expect, a currency war to break out. I think there would be some careful management of currencies to some extent to make sure that the level of the currency is consistent with the, should we say, economic cycle of the individual countries, right? But I think an outright currency war I don't think is in the cards.
My final question to you then, and do you see commodities like crude oil and gold prices moving over in the next 1 year? Are you looking at any bullishness there?
Well, I think gold, I don't think necessarily looks very, very promising. Obviously, it's received some beating already now with, should we say, Fed tapering on the way. Should we say the prospects of returns on U.S. assets, whether it's equity and yields improving. That, of course, has not been a positive for gold. So I would still suggest that that's going to remain a challenging year for gold, for that commodity. Crude oil prices, I mean, with the global economy likely to slowly shine through during the year, of course, from the demand side, that would add a bit of a lift to crude prices. But I think at the same time, if you look at the supply side of things, there are things under the way on that front that are also pushing things forward, right? So that is going to, I would say, contain the uptick in crude prices. I don't really expect much of an upswing there, even as the global recovery shines through. And also, the global recovery in itself will be quite moderate, so I don't really think we should expect a very swift recovery on the global front, and therefore in demand for crude and other commodities.
All right, Life, we'll let you go at that. Thank you so much for joining us with your update on currencies. That's the view coming in from the HSBC Global Market there. But let's tackle those flashes which were on your screens just a minute back. The Mumbai police has now filed a charge sheet in NSCL case under MPID Act. They have done that today. And all the 5 charge sheeted cannot apply for bail. The names of them perhaps are Anjani Sinha, who was the CEO of NSCL. You also have the 2 VPs there, Amit Mukherjee and Jaypal Khundi. And 2 borrowers from Lotus Refineries and NK Proteins are the 5 people who have been named in the charge sheet, and they cannot apply for bail. Mumbai police also says that they are going to file more charge sheets in the case going forward. Well, that's the latest coming on the NSCL case there. But let's go back to currencies, where we have seen yet another day of decline coming in for the currency. Let's also get the Indian perspective. We are now joined by Alok Singh. He's Chief Investment Officer, Fixed Income BOI, AXA Mutual Fund. Alok, hi, welcome to the show. What's your sense now really coming in for the rupee? Because after every single day of 2014 has seen high volatility and declines as well.
Yes, volatility was the name of the game in 2013 entire year, and we saw that volatility in the rupee as well. But I think going forward, things are actually more to come from outside India than what happened domestically, because if you look at from the domestic front, till elections per se, there is not much data which will come on board for markets to react, other than, of course, the gold import restriction which was imposed, and but till election I don't see that getting lifted, because increase day by day government is getting into the election mode, and these are not the things which will bother them that much in the election, so they are more concerned about other things than lifting ban on the gold import. Though there has been some talks about that, but I don't think that's coming. Second is the oil importing companies, or rather the oil refiners, when they go for the swap unwinding, some volatility can come around that. But other than that, really the volatility has to come from outside. What happens to the US dollars vis-a-vis euro, and what happens to US treasuries, I think that will guide the market. Indian rupee more than domestic concerns, because other than that, if you look, things look stable right now. The current account deficit, if the gold import restriction remains, is okay. It may not be good, but it's controllable.
Sure.
If the Indian government bonds get included in the index, you get additional some $15 to $20 billion. That adds the cushion. So so incrementally there could be a positive from the bond getting included in the bond index, global bond indices, and on the negative side there could be gold getting lifted, gold import restriction getting lifted, and the unwinding of the oil company swap. So these are the positive, negative, which looks like balance. So I don't think much of volatility can come from the domestic front. It has to come from the offshore markets.
Well, absolutely. There's volatility coming in from all sides, as Alok pointed out. But Vijay, what's your sense now on the charts? A declining rupee starting the new year. Do you see further declines?
I would say yes, Manisha. I remain a buyer on the USD INR on declines. I would even buy the euro on declines. A caveat here, I'm already nursing longs in the euro. I think the probability of the rupee appreciating has a limited headroom. The fresh triggers that are now being talked about in the market is the potential weakness emanating from China. There are also indications from the Philadelphia Fed chairman that the US Fed might just contemplate raising the Fed fund rate marginally. So these are triggers which can upset the calculations of a whole lot of program traders in both the emerging markets as well as the Middle East, North African markets. I think the emerging market currencies, the MENA currencies, can decline vis-a-vis the US dollar. And once the USD INR goes past the 63.30 levels, I think the rally in the dollar can get accelerated by short squeezes. And on the flip side, I think 60.80 remains an absolutely euphoric scenario up to which the rupee can appreciate up to, although I don't see that happening in a very, very immediate future.
Alok, that's a question to you as well. What's your sense now on how we should be following the international markets? Because the way the US dollar has been jumping up and about, would you call it the starting strong for dollar for 2014 as well?
Yeah, absolutely. And, not only, if you look at the incremental data has been positive off late, and, if the job numbers, basically the non-farm payroll remains okay, we will see dollar further appreciating against other currencies, and I think for the immediate short term and a long term, I think dollar is looking for like a strong currency in 2014, and I think that will have impact on currencies like us.